Hello, this is David at My Time to Retire, where I talk investing and personal finance as I plan to retire before the age of 50. Today, I'm going to share my net worth over the years and show how it has grown to over $2.7 million. Tracking our net worth over the years has been incredibly important. Not only has it done the obvious by allowing us to know the value of our investments, but it has been important in keeping our focus on investing. With me being so focused on investing, it has helped me find opportunities and move into them early. I've amassed years of data tracking our progress. Being able to step back at times and see the value fluctuate and grow over the years has helped us maintain a patient and long-term approach to investing. I graduated high school in 1996 with only a few $1,000s to my name. 10 years later, after getting an associate's degree in a trade school, at the age of 28, that I had grown to about $100,000 in investments, with over 90% of that $100,000 locked up in retirement accounts. In 2006, my wife and I got married. She was debt-free as well, and with the money that she had saved, we used that about entirely for the down payment of our house in 2008. This chart here you have in front of you shows our investments here starting in 2011 with this balance of $262,000. Basically, in 5 years, we went from $100,000 to $262,000. This is actually a very poor rate of return, considering that we were saving about $20,000 a year and adding it to our investments. That is really only a 5% rate of return. And it is right around this time when we shifted our focus and started investing more into individual stocks. We stopped paying extra to our mortgage and channeled that money towards stock investments and retirement investments as well. And over the years, it slowly and steadily grew. We lived a very frugal lifestyle. We saved a high percentage of our income. As our income grew, we allocated more and more money towards investing. And as you can see here, some of these dates we've marked some large purchases. And then in about 2014, we had our balance about $406,000. And as you can see here in this chart, we have non-retirement accounts, pre-tax accounts, 401ks, traditional IRAs, and post-tax. This is Roth IRAs. Cash equivalents up here in money market accounts, mutual funds below, and then the stocks and ETFs that we started to invest in. And this is representing 10 years ago. You can see the foundation for a lot of the growth that we had later on and the success that we had in tech stocks. Apple, AMD, then we have Bank of America, which was a long time holding, Facebook, Corning, Netflix, and scrolling even farther down, Sprint. These were all stocks we held for very long periods of time. We added some over the years, and then we trimmed as they did very well. But you can also see a lot of very poor investments here. Stocks that some of them don't even exist anymore as companies. And we certainly didn't make all the best decisions, but luckily some of those good decisions far outweighed the many poor decisions that we have also made. If you take a look here from 2014 to today, where we are now at 2.7 million in 10 years, that's a considerable amount of growth. Over the years, you can kind of see the steady increase where we finally achieved about $1 million in 2018. And then, some fluctuations as the markets normally do. We paid off our mortgage here in 2020. There's a video talking a little bit more about our reasoning for doing so. And then when COVID hit, you can see this sharp downturn here and then a steep uptick. In 2020, we were back over $1 million, and then it just steadily grew. And then right around this point, I would say within these months, it did cross over the $2 million mark, but it made a sharp, sharp decline where we probably lost over a third the value of the investments. As you can see here in October of 22, I didn't even want to look at the investments. I was, months after months after months of decline, I kind of was holding back, and we didn't sell anything. We continued to dollar cost average in, but this was quite a sharp decline and very, very big challenge to deal with. Anytime you see, losing over a $500,000 in value of any investment, it's going to take a toll. But we stayed focused. We continued to dollar cost average, and we had faith in the future. And from 2022 to today, we've had over $1 million increase. That's almost $500,000 or more a year as the money has then climbed to get us to where we are today. I have no idea what the market is going to do in the future. I can only kind of demonstrate where I've been. This is not investing advice. I kind of want to tap into the YouTube finance community as I shift our focus from growth towards more of an income approach, where we want to grow our portfolio to about $3.3 million in 2 years and then retire. I'm looking to do more of a dividend income investing. You can see here over the years, for the last 10 years, you can see the annual increase in value. Now, this isn't the rate of return. We've been adding money as we every month, every week, really, into the market, and these are just the increases in the balances of our investments. You can see some sharp declines here, but relatively speaking, we've had some phenomenal increases. And at the end of 2023, we're at 2.1. So at the beginning of 2024 to now, again, over a $500,000 increase. We'll see how the markets go. We probably are due for a correction. I have no way of predicting or how that's going to be, but our strategy isn't really going to change. We still need to grow our finances over the next 2 years. I'll use this channel to kind of demonstrate some of the decisions we're going to make, explore some of the possible strategies that we're going to have to adopt. The YouTube community has been very, very, very good resource for us. And as this portfolio here, which I can kind of show you, as we sat at the beginning of this month, beginning of October, it's going to have to change a little bit. We're going to have to shift some of our investments. Some of that shift has already occurred. I have, Starbucks. I've got Pfizer. I've got some other more, Merck, Markel. These McDonald's and Coca-Cola and Pepsi. These are all investments which, I probably would not have been in just a few years ago. We got real estate REITs, a lot of energy stocks. These are a shift more towards income, dividend growth, and capital preservation, really. But we're still going to have to grow to get this $2.7 million up to 3.3 and where we want to be at the time of retirement. I welcome your criticism and your scrutiny. We're going to have a lot of things that we're going to have to talk about in the next couple years. I'm going to track my buying and selling almost in real time, kind of show you, put out there those decisions and hold myself accountable. And I look forward to exchanging ideas and looking, because if you look here in this category, this is really the only money that we can tap without going into retirement accounts or tax advantaged accounts. That is not enough to fund a retirement. We have less than $400,000 here. The vast majority of the funds are in retirement accounts, and there are ways to access it, and we're probably going to have to do it. What's the best approach? I don't know. This isn't investment advice. Everybody should consult a financial advisor. I probably will sit down with one here in the short term to see that person's suggestions on how we should proceed. But ultimately, the decision is going to be up to my wife and myself and how we proceed. And I'm open to a lot of suggestions and ideas. Uh, and we're very focused and determined to getting to that early retirement. And I really hope you like, subscribe, and offer your insight. And hopefully, I can track our progress to reaching that goal. So, thank you for your time. This is David, My Time to Retire, and I look forward to what the next 2 years brings. Thank you.